and welcome. You're watching Indian Open. Let's see how the Asian markets are doing at this point in time. What we're seeing is a little bit of weakness, marginal weakness for the Nikkei. The Shanghai is giving us marginal returns too, but Hang Seng is up and about by as much as 0.5%. So mixed cues coming in as far as Japan and China is concerned. Not too much to speak for there, but we haven't really seen too much of a movement in the SGX Nifty either. It is trending higher than 11,700, a mark we lost out yesterday as far as the Nifty is concerned. That is the spot. But for now, 24 points higher, and we will keep an eye on this one. But what does this tell us about the futures and options space, and where can we go from here based on the kind of movements that we are seeing on some of these some of these cues? We have Navneet Saluja who's joining us to give us an update on the same. Navneet, good morning.
Thanks for that, Agam. Good morning. Well, sharp sell-off seen in yesterday's trade, but if you look at the Nifty futures, there was no fresh shorting seen, and that's been the trend. Whenever the market is trending lower, these are basically the positions which have already been taken in the market are seeing some bit of unwinding. So yesterday, no major tick coming in for the Nifty futures. Remember, Nifty closed below its 50 DMA in yesterday's trade, and also for Bank Nifty, which is now trading pretty much close to its 50-day moving average, so unwinding of positions of about nearly 10%. Remember, the India Volatility Index, it's come off from the levels that we've seen in the month of May of about 29. But in yesterday's trade, right from the time the markets opened, VIX inched higher, so that was up about 5%. Look at the Nifty PCR. I think this is going to be an important metric because yesterday there was a lot of call writing in the system, and the Nifty PCR fell to levels of about 1, which is now around the oversold territory. So looking at Nifty PCR, let's see if there is any sort of recovery which can come back in the markets. But looking at the options data, with the fall one saw in yesterday's session, now the base has moved a little bit lower. The maximum open interest now on the call side has moved to levels of about 11,900 from 12,000, and on the put side to about 11,700, as you can see. Call writing seen in yesterday's trade, so you had strikes like 11,900 and 800, which saw significant writing coming here. 11,008, 700 on the put side, 11,600. The lower level strikes are becoming active where open interest addition was seen, and definitely put writers of higher levels ran for cover. 800 and 900 saw some bit of unwinding in trade. In terms of stocks, which one to keep an eye on and what happened in yesterday's trade, Apollo Tyres saw fresh long position, 3% equity changed hands here. Fresh shorts were seen in Shriram Transport. Piramal Group exited by selling their 9.9% stake. PVR was in focus. This one saw aggressive shorting in yesterday's session. And you also had the steel stocks which came under pressure. So fresh shorting was seen for Jindal Steel and Power. What did the FIs do? They sold in the cash market, but on the index future side, they did buy some bit of long contracts and also on the short side. But I think it was the options data which was in focus. There were more bearish bets seen on the options side because they bought about 25,000 contracts on the put long side, and also on the call short side, contracts of about 7,500 were added in yesterday's trade. Back to you guys.
Okay, Navneet, thanks so much for joining us and taking us through the futures and options calls. But moving on, in a move to rescue investors of its fixed maturity plans, HDFC Mutual Fund will buy non-convertible debentures of the SL Group companies worth 500 crores. This would transfer any loss due to the investment from investors to itself. We have Darshan Mehta who's joining us with more details. Darshan, what are the updates?
Yeah, so basically what has happened is that there are two types of FMP plans which probably HDFC AMC will buy. One of them is the schemes that this will apply to schemes that were already matured in April 2019, and secondly these schemes will also apply to schemes that will mature till the HDFC AMC SL Group agreement stays, because when SL had all this trouble, they made a deal with a lot of these AMCs that probably these AMCs would not sell because they are on the way to resolution. Some of the FMPs which were already rolled over earlier, they will not be part of this. So basically, HDFC AMC will acquire such NCDs at prevailing valuation. Now, there's just one brokerage report that has come out, and that is Morgan Stanley. They are saying that this move should benefit investors and improve the sentiment for the unit holders, but at the same time, the move will transfer the risk of under recovery to the company. They're saying this will entail HDFC AMC to undertake assuming a financial risk in case of an under recovery that is there. So that's quite negative for HDFC AMC. And what also they say is that the estimate HDFC AMC's security cover of 1.2 to 1.5 times versus 1.4 to 1.8 times earlier. So they're saying this move is not good. Probably expect a negative reaction to the stock today.
Well, let's wait and watch as compared to then. Darshan, thanks so much for putting that into perspective. A negative reaction on the stock which is trading around new highs when the market is jittery. Maybe a small reaction downwards. Let's wait and watch if that happens in the first place also or no, because compared to the annual profits, 1 year's profits, 500 crores, again not written off. Don't know how much will equity investors make of it over a period of the next few days. Maybe today will be a negative reaction. But is it a foregone conclusion that the money is lost as well? And is HDFC AMC an exception to the rule? Yes, we haven't seen recently AMCs do that, but in the past such instances have happened. To talk about all of that, Kaustubh Belapurkar of Morningstar Investment Advisors joins us right now. Kaustubh, appreciate you taking this time out this early in the morning. How have you read into this move?
So, Neeraj, I think an interesting move, and obviously for unit holders of the FMPs, something to cheer about because they weren't sure when that portion of the money would come back to them. There was a lot of uncertainty. So, in terms of that, sentimentally, for a mutual fund investor, yes, I think a good move. But like you just pointed out that this is something that hasn't happened for a while. It did happen in the erstwhile era, maybe a decade ago when exposures were much smaller and investors were kind of used to expecting that the AMC would take on the risk on their books. I don't think we're living in that world anymore. So I don't think this will be something that will be continued, going forward all the time. These are, obviously unusual circumstances. You might have a one-off thing, but we don't see this being the norm, in these days.
There are two things, and we'll talk about the stock piece with somebody else, but just from a perspective of an FMP shareholder. Now, what does this do when you are advising people who might have exposure to schemes which had exposure to SL Group essentially across AMCs? Would you believe that what HDFC AMC has done is something that people will now start expecting everybody else to do as well? And does that kind of cushion any kind of concerns that FMP holders would have when they're holding schemes which has the SL paper?
So, like I said, I think this is probably going to be a little bit one-offish. I don't think, because, given the size of the exposure now that, funds carry, it's going to be very hard to take everything and anything on their books, and it wouldn't be the right thing to do. I think, obviously, HDFC's come from that. There's been a huge sentimental impact. We look at the industry, there's been so much negativity that's been around from investors in terms of money moving out of different kinds of funds. So, at least sentimentally, it will kind of hopefully go to, alleviate some of the concerns that, investors should feel, okay, that there is something that can be done. But, I don't think this should be the norm because clearly, I think here in this case, probably HDFC has some comfort around that, either they're very close to inking a deal where they can, that standstill agreement should kind of pay off, or, worst case scenario, sell off the pledged shares to make good what they're taking on their books.
Do you think, Kaustubh, that this in any way helps in softening the impact of the SEBI proceedings against HDFC?
Okay. I'm not sure if I'll be able to comment on the exact nuances of that, so I'll let that go.
Fair call, no problem. Just one final question, Kaustubh. If indeed, while it seems that, or why everybody is hopeful that such instances of resolutions or inking of a deal, etc., will not happen in the future. But going by the scheme of things, there might be a possibility that some other, there's never one cockroach, right? There are more. So what if some other instances like this happen? Do you think HDFC AMC individually has now set a precedent for itself if indeed something like this happens in the future? Now, I know this is not unusual because I think Franklin Templeton had done this when it came to JSPL's case back in 2016 as well. Maybe there are some other instances that I'm missing out as well. Has HDFC AMC set a precedent, if not for the industry, then for itself?
I would say yes and no. That's where it's very important to manage the expectations of investors that, this, given just the times that we're in, there's so much negative noise. And like I said, the outflows have been huge. Sentimentally, it's probably a good thing that, there is something like this happening. But, again, I would want to take that with a pinch of salt, saying that, this is not something investors should come to expect going on. So, I mean, that should be a messaging that should probably come out very clearly, once the dust settles around this, that, this happened, we want to be with you, but this is not something that should be expected, in every case that happens. Because, I mean, credit risk is something that we keep talking about. That is a part and parcel of investing. You need to be prepared for that. Just the other thing that which I probably want to seek more clarity on is, they've written about the valuation at which they would buy the bond. Now, I want to keep an eye on that because clearly, we've seen some sort of, rating downgrade as recently as the end of May on these two instruments. So I'd be keen to see at what valuation does the mutual fund AMC actually buy out the bonds and deliver to investors.
Okay. We'll leave it at that, Kaustubh. Thanks a lot for joining us and giving us that perspective.
Sure. Thanks, Nick.
Well, trying to cushion the SL hit. And remember, on social media as well, this whole conversation has been the talk of town, to be honest, because don't quite know which way the street would look at this, Agam. I mean, you look at it from an FMP holder's perspective. Here's the AMC, which for all practical purposes was in the part of the agreement, is part of the agreement, and now is giving the option to the FMP holders that we'll try and cushion it. But from an equity shareholder's perspective, why is it that the equity money is being put to use for actions? I wouldn't call them errors. Don't quite know if it's an error in the first place or whichever way it shapes and form. It's not usual, let's put it that way. But for actions taken by a few AMCs and then using shareholders' money to help the FMP holders, it's not necessarily the right move. It's not necessarily unusual. It has happened in the past. And does it have a really material impact on the stock? I don't know.
But
maybe
this is the question I had for you, Neeraj. If it applies to something like a debt instrument, then it should apply to an equity instrument too.
Yeah, that's difficult to judge. Right? I mean, the point is, equity, I mean, you kind of implicit that the equity holder assigns himself up for more risk, and there are no agreements being entered, because an equity investment lost might recover on its own. A debt investment lost, unless there is an agreement like the way these holders have reached with SL, is booked.
Right.
And that's what I think the AMC doesn't want. Maybe there's a deal in place very shortly, and that might help the AMC recover the money as well.
Fair enough. Yeah. Of course, all these factors and pointers is something that we are going to get much more clarity on through the course of the day. But on that note, let me go across to our research team to talk to us about all the stocks which are in the news, as well as an analyst meet that we've had over the evening yesterday. So I have my research team. Good morning to both of you. Mashika, let me start with you with the stocks and news. What do we have?
So not a very long list today. The first stock we're looking at is Biocon. So they've approved the sale of Branded Formulations India to its subsidiary Biocon Biologics for 45 crore rupees. Analysts see this move as a precursor to the IPO for the division, and the company has fixed July 1st, 2019 as the expected date of completion of the sale. Then we have Indigo. They've ordered jet engines worth $20 billion from CFM International to power 280 Airbus A320neo and A321neo aircrafts. They're changing their main engine supplier as problems with Pratt & Whitney's Geared Turbofan continue to impact the airline's Airbus 320neo planes. We also have McClure Russell. ICRA downgrades ratings of the long-term and short-term borrowings to issuer not cooperating category due to non-submission of the monthly no-default statement by the entity. Now let's have a look at the important bulk deals. White Iris Investments buys 2.8 crore shares of Apollo Tyres at 199.8 rupees per share. Then we have Shriram Transport. PEL sells 2 crore shares of Shriram Transport at 1,000 rupees per share. HDFC Mutual Fund buys 63 lakh shares, while SBI Mutual Fund buys 36 lakh shares, both at 1,000 rupees per share.
Okay. And we've also had Coal India analyst meet. Nikki, what are the updates here? What is the management saying?
Well, most of the brokerages, according to the analyst meet takeaway, they've maintained the kind of buy rating, but then they have had a cautious stance in terms of production targets and also their pricing power. What CLSA typically has said that it's maintained the buy rating with target price of 290. That indicates a potential upside of more than 17 to 18% on this counter. It said that it's optimistic on the volume growth despite on-ground challenges. Says that rail links coming up gradually, which are critical, sees no visibility on price hike and benign cost outlook. JP Morgan on Coal India, it's maintained the neutral rating on the counter but has cut the target price to 260 from 265. Has raised concerns in terms of the global coal prices, which have corrected as much as 25% in the last 3 months, which are expected to weigh on the earnings as per the brokerage. They don't expect much out of e-auction prices, which essentially until now have been the driver for Coal India. They do not expect e-auction prices to collapse though, but then they expect some kind of moderation coming in the second half of this financial year. Large dividends and inexpensive valuations are expected to support Coal India stock, which has always been the case until now, but then they also see government to sell down further in Coal India given the divestment revenue target. Edelweiss Securities, it's retained hold rating out there on the counter, but then it says it has raised caution in terms of the volume growth, which it feels is an uphill task. 1 billion ton production target, which has been further delayed by 2 years by FY20 now to FY25 from FY23 earlier, but still the brokerage feels that it's going to be an uphill task for the company. However, in terms of positive, it says that dividend yield is likely to remain around at that 5% level, and thereby sees a favorable risk reward for this counter.
Okay, thanks. Thank you guys for getting us those details. So we'll be watching out for how some of these stocks move. But well, we do have Mayuresh Joshi of Angel Broking who is joining us right now. Mayuresh, good morning and thanks for taking the time out. Let me begin by asking you about the latest move with respect to HDFC AMC, where we'd have this arrangement with respect to fixed maturity plans in the SL group, where they will transfer a little bit of the exposure towards themselves. From a shareholder point of view, and when it comes to HDFC AMC, how would you look at this development?
So one really needs to analyze the exact impact that the entire move will have. And I absolutely concur with Neeraj. I think the discussion that you were having, I just heard it off air. I think equity shareholders have to probably have or partake the kind of risks that are probably involved at this point of time. Debt holders probably are to a certain extent ensured and assured in terms of the capital and the return that is probably expected to come out of the instruments that they've subscribed for. So the move, I think, should be taken positively in my opinion again, but let's see, I think, how this entire move pans out because the markets are very, very volatile at this point of time.
But Mayuresh, 500 crores of a line which is not completely lost, so money not necessarily gone down the drain, in all probability might be recovered too, but that is on a base of what, 900, 950 crores of annual profits. You think a dramatic reaction on the stock is possible?
Well, it is absolutely possible, as I said, but a large element is the contours of the deal and when the deal probably goes through. So again, I think we're coming back to the same point in terms of expectations of the valuation that the deal will receive. And I think being one of the primary stakeholders in terms of receipt of money once the deal goes through, I think it's just an adjustment entry made at this point of time. So I think as the deal goes through over the next few weeks, I think that part of the money should probably get recovered in terms of the balance sheet.
Mayuresh, what do you do with the globally exposed stocks now? This, I don't know if it's in part due to this whole US-India retaliation or the slowing global growth, etc. But yesterday, the top 4 nifty losers were the likes of Tata Motors, Tata Steel, JSW, etc. So anything with global linkage is getting impacted. If you were a shareholder in these names, let's nail it down to the 2 steel names, Tata Steel, JSW Steel. What would your approach be now if you have the stocks in your portfolio?
So unfortunately, I don't hold them at this point of time. But again, I think a large element, Neeraj, for the ferrous companies in general, I think, is the whole expectation in terms of realizations improving. Now, with the impending US-China trade wars still looming large, and the expectations in terms of demand-supply pressures also probably taking a toll in terms of realization growth. I think that is probably creating a huge impact in terms of balance sheet dynamics. The second element that steel companies are probably looking at is to increase the output, but volume growth is also dependent in terms of the overall demand dynamics. So what you've probably seen, Tata Steel, for example, I think the Netherlands plant is probably better off in terms of the EBITDA performance. But what probably goes through with the ThyssenKrupp deal, as has been called off, I think what they probably built up on that front, I think, is going to be extremely critical. The only point that probably remains in favor of these companies is low inventory levels. So inventory levels are absolutely low for all these companies. And any resolution when and if and when it comes through over the next few quarters, I think that can have a huge impact. So I think at least at this point of time, looking at demand-supply dynamics, looking at LME realizations, and looking at the cash flows that are probably coming through because of these two factors, I think the global operations are looking a little bit sticky. When you probably talk about the domestic operations for JSW Steel, for example, I think the kind of expansion plans that they've got, I think they've got huge capex requirements needed to be done, both for the upstream as well as the downstream facilities that they're building in. So I think the complete integration that JSW Steel is looking at, the expansion that they're probably looking at, is probably hinging on the fact in terms of demand still holding strong. Government, as the budget is passed, I think the spending on the capital account, specifically in terms of infrastructure, I think that is expected to give a huge fillip. But again, I think input costs are extremely critical, both from a global scale as well as a domestic scale. So what you probably expected to see in terms of input costs, if they start moving higher, we probably heard something in terms of our sources saying that there have been price increases, both in terms of flat and long prices as well. How much of an impact does that have in terms of demand over the next couple of quarters is going to be interesting. So EBITDA, I think it's quite fair at this point of time. I think there'll be better opportunities. One should not be rushing into these stocks at this point of time.
Okay, well, it's 8:45. It's time to get in our technical experts. Well, Hadrien Mendonca, Senior Technical Analyst at IIFL, is joining us on the show, as is Amit Harchekar, Director at Index Genius Investments Advisors. Good morning to both of you, and thanks for taking the time out. Hadrien, starting off with you, your view on the indices. Where do we go from here? Are you anticipating more weakness?
Yeah, hi, good morning, Agam. And yes, definitely there has been, an increased aggressiveness of selling pressure that we have seen in the past two sessions. And the Nifty, which had broken out from a rising wedge kind of a pattern on the daily charts, it has, that breakout has actually turned out to be a false one. Yesterday, the Nifty was also seen breaking below its simple 50-day moving average. And previously when we saw, the 50-day moving average break, we saw a little bit of further selling pressure also happening. So I think, given the overall scenario, I think I would actually go ahead and short the Nifty once we see, a kind of a positive opening that we are expecting, given the HDFC Nifty trading 20 points higher. Once we see that, higher opening, one can consider going short on a Nifty for a target of 11,300, keeping a stop loss at 11,745.
Okay, and Amit, how are you reading into these cues right now?
Well, I would be extremely cautious on the market. Even in the previous week, we had discussed that the 30 days historical volatility has crossed the danger mark of 16.5. And now we are looking for a volatility to expand further towards 18-19%. Whenever such move happens after an congestion phase of more than 6 to 9 months, generally we see a big amount of correction taking place in this market. For index, from an index perspective, we have already seen a lot of divergence coming from the mid cap and small cap index, where all these indices were underperforming the Nifty, and now we think there is a very high chances of even Nifty to drift lower. We also have a case where the USD-INR is about to break out from falling channel, which could again force it to move higher towards 70 to 72.5. Plus, on the other hand, we have Brent crude prices which are bottoming out at these levels. So we think the risk for the markets in India remains extremely high. A lot of long positions are waiting for a stop loss of 11,400. Once that gets triggered, you will see another round of selling. So right now, what we are suggesting to again initiate short position in this market with a stop of 11,860. Now, in previous week also we had mentioned that FI's buying price in Nifty futures stands at around 11,850, and the moment that got breached, we have seen a good amount of cash-based selling taking place. So we expect this cash-based selling to continue, and we are expecting a target of 11,400 in the Nifty in the near term.
Well, that's interesting, and the credit where it's due, Amit's been largely short, and I think that over the period of the last few days has paid dividends. But 11,400 is about 250 odd points away. It doesn't seem too far off looking at what's happening in the indices the last few days. Let's wait and watch. Somewhere during the course of the show, we'll ask our experts about whether they are buying some options as well. It might be interesting to figure that out. But for now, firstly, the stock recommendations for the morning. Hadrien, what are the stocks that you are asking your clients to initiate some trades on this morning?
Yeah, so we have a long as well as a short trade. The stock that we are slightly bearish on is a Bosch. The stock is actually given a fresh breakdown from a descending triangle pattern. It has also failed to sustain above its short-term moving averages as well. So every time we see a rally towards a short-term moving average, we are seeing intensified selling pressure on every small rallies. So I think Bosch has further on broken below those important support areas, and I think one can consider going short on a Bosch June futures for a target of 16,346, keeping a stop loss at 16,691. The second stock that we are slightly bullish on is an Hexaware. The stock has found very, very strong support around its rising trendline support area. Secondly, it is also bouncing off its 100-day moving average. Yesterday's trade, the move has also surpassed its long-term 200-day moving average. So I think it merits a buy around these levels. We are expecting a short-term target of 363, keeping a stop loss at 352.5.
Okay, and Amit, what about you? What stocks look good to you today?
Well, I have two sell calls, and again, I'm using the top-down approach for triggering these short calls. My first pick would be going short on ITC. Now here the rationale is Nifty FMCG index has already completed a running triangle, and we think now this index is poised for a 10 to 12% decline in the near term. Even if you look into from ITC angle, it has also gone through a phase of 2 years of consolidation, and right now it's trading at a support of descending triangle. There is a high likelihood that this triangle gets broken on the lower side because FMCG index is also indicating a weakness. So we are expecting at least 15 to 20% fall even in ITC. On the short-term basis, we are expecting 287 to act as a major supply zone. So we would recommend that as a stop loss on a closing basis, and we are expecting a target of 257. Second pick would be going short on BPCL. Here we have again two reasoning. On one side, as we said, we are expecting Brent crude prices to inch higher back towards 70 to 74 zone. And on the other side, if you see the Nifty Energy Index, it has also completed classic rising wedge pattern. So there also we are expecting a 12 to 14% decline on a short-term basis. So we are expecting BPCL to again face a lot of pressure. Even Reliance, we are expecting a 10 to 11% decline there, being part of that Nifty Energy Index. For BPCL, we think 390 would act as a major supply zone. So that should be kept as a stop loss on a closing basis. And we are looking for a target of 344 to 350 on the future side.
Two large cap names, both index names and short calls thereof. And that's what I think Yash Upadhyay has as well on our special segment Bloomberg Edge. He's talking about an index stock as well. Yash, good morning. Why Bharti Airtel?
Morning, Neeraj. So Bharti Airtel has been trading weak over the last 4 trading sessions. In fact, 3 out of those last 4 trading sessions, the stock has ended lower. With yesterday's day in particular, it closes more than 2% lower, with volumes 2 being higher than the average 20-day. And on the back of it, the stock has comfortably closed below the trender line. But as we always do, let's first try and understand what the trender indicator is and how do you interpret it. The trender is basically a Bloomberg proprietary indicator, and it uses the average 2 range for the purpose of calculation. It helps generate a buy or a sell signal and also helps manage your stop loss. How do you interpret it? You follow the color of the trend line. When it flips from red to green, you go long in the counter, and when it goes from green to red, you go short in the counter. That has exactly happened in the case of Bharti Airtel. Now, the trend line, which is the green line over here, that stands at 346. The stock has comfortably ended lower below that mark. It's about 344. And on the back of the selling that we've seen over the last 3 to 4 trading sessions, it seems that the trend has now reversed on the lower side, because it went from the level of 360 in the month of September. It went, and then the trender had flipped from green to red. There was a huge sell-off. It came down to levels of as low as 280, and then again in the first week of March, it came from the level of 280 to as high as 360. It completed a full journey, but at the highest level, which is at the mark of 360, it is facing a stiff resistance, and on the back of that, we are seeing weakness, and the trender indicated too, suggesting that it could move lower from here on.
And how's that done in terms of success over historically?
So Agam, out of the last 4 times that the trender indicator has flipped its color from green to red, the stock on an average over the next 10 days period has managed to fall in excess of 4.5%.
Okay, Yash, thanks for joining us and taking us through that interesting call on Bharti Airtel as per Bloomberg's proprietary trender indicator. But moving on, and I'm actually going to bring up ITC, considering we've had the annual report which got released last week. And well, from cues, I'm actually looking at largely positive cues. One of them, of course, being the fact that we've seen less contribution of cigarettes, which have had so much exposure to, well, in general regulations, and that perhaps can be taken as a positive, which is why the street is also looking kindly towards ITC, because I'm looking at the analyst ratings right now, and we have about 34 out of 40 analysts who have a buy call on ITC, and a price target, an average price target of around 345, which is much higher than the current market levels. Our technical experts, however, are seeing weakness in ITC, but fundamentally from the long-term perspective, well, as you can see on your screen there isn't anyone who is, well, at least in the top list, there isn't anyone who has a sell rating here. So we're going to keep an eye on that one. I want to take up ITC with Mayuresh as well. Mayuresh, what's your view here? How does this one look in relation to the other large FMCG players at this point?
So Argam, I think clearly if you stack up from a valuation perspective, valuations have always been cheap for ITC considering the others in the pack at large. Again, I think a large element of that was the cigarette business, and again the expectations in terms of price hikes, both in terms of excise duties, the sin tax which has probably come through. But again, I think a lot of that pain has got gestated through. Now, if you probably look at the volume growth, even in the quarter gone by, I think it was a very, very good performance, both in terms of volumes. Though I think the EBIT and the EBITDA performance on the cigarette business itself was a tad bit below expectations. I think it still held up pretty well. And you're absolutely right, Argam. If you're probably looking at the capital invested in the other businesses, the other FMCG, for example, I think there again, I think the growth patterns, considering others in the pack at this point of time, have been pretty reasonable. What you're probably looking in terms of agro trading, in terms of their paperboard business, and again the hotels business, where utilization levels, the revenue per operating room is expected to improve as utilization levels start inching up for the sector as a whole. I think the EBIT margin performance, I think, is definitely going to improve for these lines of businesses going forward and contribute quite gradually increasing the contribution over the next few quarters. The kind of earnings perspective that one really has, I think the earnings perspective should also remain very, very steady and strong. So if you have a dual approach in terms of valuations and a steady earnings compounder, I think ITC fits the bill very well.
Mm-hmm. Okay, well, Goldman Sachs, I believe, has added ITC to its conviction list as well. Let's wait and watch if that has any impact on the stock in today's session. Amit Harchekar, of course, believes that there's a likelihood that the stock will go down. What is very likely will go down is Jet Airways. That stock too looks like it'll start off lower in today's session as well. No reasons for it to do anything otherwise. Let's wait and watch. I just feel it's difficult to give a call on this one on the other side, which is on the long side, and difficult to give a call on the short side unless you're a high risk trader, because a lot of damage has been done. But the equity value seems to be negligible out here from the looks of things. Where, Mayuresh, I want your quick opinion on is Shriram Transport. Yesterday, bulk deal, Piramal getting out, couple of mutual funds checking in, valuations have corrected, but it's an NBFC, and the future seems to be a bit unclear for NBFCs. What would you do here with Shriram Transport? Would you buy it this morning?
So again, I think the pain might continue, and absolutely right, I think, and that gets evinced in terms of the reported NIMs, which have contracted. The second element, which is a tad bit encouraging, Neeraj, is that the GNPAs, both gross stage 3 and the net NPAs, have actually contracted. So I think gross stage 3 GNPAs probably stand at 8.37%. The net NPAs stand at 5.49%. Again, I think if you're probably looking at the expectations in terms of AUM growth, disbursements growth, I think the management remains very, very sanguine. But again, I think the older vehicles, I think there again where you've seen the pain come through is the MHCV segment. I think if you probably look at the con call that even Cholamandalam and the management thereof had to mention, I think they were a little bit cautious when it comes to the MHCV segment. So I think how this entire growth patterns pan out, both in terms of OEM sales picking up, you've also got new truck sales as pre-buying will start happening in the second half. But in terms of Shriram Transport's business model, I think the expectations of a slow and gradual recovery should be on the cards. When you're probably talking about the valuation perspective, you're absolutely right. I think even if I take an adjusted book value of 800 odd rupees, it's probably at a price to adjusted book of 1.2, 1.3 times, which is very, very low compared to its historical means. And the kind of ROAs and ROEs it generates, ROEs of 2.5%, ROEs of 17.5%. So is there value in the business? Absolutely yes. How do you probably enter the stock? Declines, wait for those sharp cuts, and then probably have the conviction to hold on for the next 1.5 to 2 years. The next quarter or two will be a little bit tepid and lumpy in terms of reported numbers. But as improvement starts kicking in for the industry as a whole, I think STFI should probably benefit over the longer period of time.
Okay, well, we just have about 10 seconds before we start getting in pre-open rates, and we're going to take a look at the Asian markets, which is mixed. Unlikely that they may have too much bearing on our markets today. At least as far as opening is concerned, the SGX Nifty is flat. But what does that mean for our pre-open rates? For now, the Nifty and the Sensex are trending higher. The Nifty by 0.5%, and the Sensex is gaining by a little over 0.25%. But we will have to wait for some of these rates to stabilize. We don't have as much news flow from some of the large caps. So I'm going to start off with some of the mid caps, including HDFC AMC. Let's take a look at whether or not it is looking at weakness in pre-open. Not as much. Our marginal weakness coming through. But what about Jet Airways, which will be referred to the IBC, and this is the resolution that is being taken up by the lenders. There you have it, 10% decline in pre-open. Besides that, we're also keeping an eye on ITC. Of course, we've had a note come through, this time from Goldman Sachs, and they're also positive. This ITC is up 2.5% in pre-open right now. And let's also take a look at Coal India, because we did have the analyst meet there. And well, the management was largely suggestive of the fact that there could be gradual improvement in the volumes numbers. For now, marginally in the red, not too much to speak for. We've also had a Macquarie note on ICICI Bank, and they are of the opinion that it is relatively better placed as compared to some of the others. And well, again, not too much movement here. Well, about 0.2% gains there. If we can also pull up Yes Bank, because we also have Morgan Stanley, which remains underweight on Yes Bank. And Yes Bank, well, it didn't show as much pressure yesterday, but that is because it has seen tremendous volatility over the previous few days. Well, on the whole, it's looking like a stable opening, Neeraj. Perhaps some shorts made yesterday are likely to be covered in today's day of trade.
Yeah, well, let's wait and watch for how much and how long. The mid caps would be an interesting one too. I just want to point out two stocks and then the currency and the bond yields. Two stocks, Jet Airways, should pull that one up for you and see what that is doing. HDFC AMC is the other one which is in news today. Will not be as volatile, of course. And frankly, there might be a bigger cut out here, but I wouldn't be surprised if those cuts are bought into the long-term trajectory of these businesses are just so strong that these small temporary provisions may not deter the thing too much. And D1 Housing Finance, big cuts yesterday. Watch out for that one. I would particularly watch out for the globally exposed companies. You know, what's happening with D1 and Jet Airways, etc., are very company-specific news. But Tata Steel, Tata Motors, JSW Steel, now they are starting to come under the hammer for a lot of other reasons than just company-specific issues. That's where you got to be a bit careful. And then try and figure out what do you do with these businesses. We'll of course try and take some technical calls on these as well, but just the currency and the bond deals very quickly, and then the top brokerage calls before we get back to our guests. 69.82 or 83 for the currency, so it's weakened and weakened quite considerably. Let's wait and watch. Over the last few days, and today's session is up, but the trajectory the last 2 or 3 weeks has been lower. I reckon the bond yields too would be marginally off for that, about 6.91, yeah, marginally off at that. Before we get back to our guests, get in Amit Sarkar, who joins us with the top brokerage calls of the day. Amit, good morning. What's standing out?
Good morning, Neeraj. On the big brokerage calls for the day, first we have is ICICI Bank, where Macquarie has maintained its outperform rating but has hiked the target price to 525 from 465. Now, according to the brokerage, ICICI Bank has been cautious in lending to NBFCs and promoter financing. Now, the bank is focusing on risk-adjusted operating profit growth rather than loan growth. Now, under the new CEO, the bank has revamped its risk appetite and the underwriting processes. And on the back of this, the brokerage has raised its valuation multiple for the bank, which has led to higher target price, that is 525. The second we have is on Yes Bank, where Morgan Stanley has maintained its underweight rating on the stock and has cut the target price to 95 rupees from 125 rupees. Now, the brokerage has cut its earnings estimate for the bank given slower loan growth and increasing asset quality risk. Now, it is also expecting more challenges for the bank when it comes to fundraising, given the stock price fall and the ratings downgrade that we have seen for Yes Bank. Now, the brokerage is expecting no loan growth over the next 3 years and a higher credit cost for FY20 and FY21. Lastly, it also sees a high dilution risk given the high capital requirement of Yes Bank and the lower share prices that we are currently seeing.
Okay, so Amit, thanks so much for getting us those brokerage views for the day. We do have a lot of discussions on Yes Bank on our social media pages, so I'm going to take that one up and perhaps take a technical view here, because what we saw yesterday was a little bit of a pause, considering it was bucking the trend. Not really bucking the trend, but it was one of those few stocks which was trending in the green yesterday. It's currently at 116. The real question is there a pause now after the severe drop from well over levels of around 300, now at 116? Hadrien, what would you do with this one? Would you go ahead and short this further, or do you think you would want to wait, maybe even go long on Yes Bank?
Yeah, so my decision would be, basically dependent on that very important August 2015 lows of 114 that Yes Bank is respecting. If you've noticed for the past 2 to 3 trading sessions, it has actually definitely taken a pause and it has stopped falling. And that's the biggest change that we are seeing in Yes Bank. So any long traders who are already long with a short-term view, keeping a very strict stop loss slightly below 114. That would be 112, 113. You can hold on to your long positions, and definitely for short sellers on a Yes Bank, one can go ahead and short sell Yes Bank only if the 114 level is broken on a closing basis, not before that.
Amit, how do the charts of Shriram Transport Finance look like? Fundamentally, not too much strong, but for the bulk deal yesterday, but it ended nearly at the lowest point of the day, or certainly off the intraday highs. How do the charts look here?
Well, charts are looking extremely weak. In fact, when you see this chart from a 10 years perspective, it's actually giving you a horrifying picture. I wouldn't be surprised if this stock starts trading near 700, 800 in the near term, because the long-term support for this stock is placed at around 1050, and we have yesterday closed below that convincingly. So there is a minor support at 980, but we don't think that should sustain for long. So eventually we are expecting this head and shoulder on a long-term basis to act as a dampener for this stock, and we could be heading towards 800 to 850 zone in the coming months.
Well, for today's session, it's slightly different, but let's wait and watch if that indeed lasts or no. We've been talking about the usual suspects. The one big mover in trade yesterday and something that contributed to losses was Reliance Industries. By virtue of it being such a heavyweight, it was the top contributor to the downside. In today's session, another 0.25% lower, 1278 and counting. Hadrien, for somebody who does not have any positions in Reliance, is it prudent to take a position here, or there are more stronger trends available?
No, I think if someone is not traded Reliance at all, I think one should just be away, because a long trader would not want to be in a situation or in a setup what Reliance is actually currently showing. There is clear signs of weakness. I think on the downside, the stock could come low towards the 1250, 1245 zone. That is where a long trader could actually try and accumulate Reliance around those levels. Not right now.
Well, I was actually thinking if there is a short position also possible, but well, it's fallen a bit. Let's wait and watch if there is more in store. Just as 8 minutes have settled down, there is clear dichotomy, isn't it? Jet Airways is doing what it is doing, must be lower. I have no surprises there and could be even lower. But Interglobe Aviation is trading with some bit of green, so do watch out for that one. There is strength in Vinati Organics that is looking like starting off on a good note again today, 2064. So amidst all the crisis that happens in a lot of mid-cap, small-cap names, Vinati is standing tall, and the ones that are looking soft even today's session include a Diwan Housing, include a PC Jewelers, Coxon Kings, as well as Dish TV. That too is looking slightly weak. Mayuresh, just one quick question. A lot of people want to do this, and which is why I'm tempted to ask this to you. Z Group stocks today, what would you do? HDFC AMC's actions suggest that maybe they also believe that there could be some deal in the future. The deadlines are approaching. Would you bank on a deal and therefore make a tactical position in either Z Entertainment or Dish TV?
So as we've discussed in the past, Neeraj, I think I continue holding on to my positions in Z as a clear disclaimer. I think it's all tantamount to what actually comes out of the deal, and everybody is probably hopeful on the street and very, very confident that the deal will come through before the end of September. Now, at what valuation does the deal come through? I think it's going to be extremely critical. And again, looking at the standalone performance, as I've time and again pointed out, I think the standalone performance has been quite strong by Z, even in lieu of the new tariff norms that have probably come through and the impact that you probably saw in terms of subscription growth, in terms of ad growth, for example. I think they've still pretty much held on. Again, I think the investments that are probably required onto their OTT platform Z5, I think those continued investments will probably go on amidst the heavy competition that we are seeing from the space. But again, I think their core business is holding up pretty well. So I think if we talk about the strong financial performance that the standalone business is probably throwing up and the expectations of the market share gains that they've probably derived X states in the south, I think you're probably expected to see a reasonable valuation probably go through. And what valuation goes through, I think is anybody's guess at this point of time. But I'm still holding on to my guns, believing and anticipating that there will be a decent valuation for Z in general. And again, I think all the elements surrounding what will go through after the valuation is probably derived at. I think all those fears might be put to rest. So I'm still hopeful, as are a lot of investors onto the street at this point of time. And a clear disclaimer: we continue holding Z in our portfolios.
Okay, I'll stay on. Gentlemen, minutes away from market open. Let's tell you, our viewers, all that they need to know to stay ahead in trade today. First up, lenders of Jet Airways have decided to send a crisis-hit airline to NCLT. The move comes after Etihad and Hinduja Group put some tough conditions in their proposal. The stock looks like starting off 10% lower at 61 rupees.
And HDFC AMC will purchase NCDs issued by the SL Group amounting to 500 crore rupees. The fund house is doing this in order to save investors of its fixed maturity plans from any potential loss.
Chinese lenders, including the Exim Bank of China, have demanded $2.1 billion from Anil Ambani's Reliance Communications, according to an exchange filing.
And Indigo orders 280 engines from a joint venture of General Electric and Safran for $20 billion. The carrier is looking to replace Pratt & Whitney engines that power Airbus Neo aircraft.
ICRA downgrades ratings of McLeod Russell's long-term and short-term borrowings to issuer not cooperating category. The downgrade comes after failure to submit monthly no default statement by the entity. The stock 3% lower at 20 rupees.
And in analyst meet, the management of Coal India indicates optimism on volumes growth despite on-ground challenges.
Now that stock is as flat can be. I think the stock of the morning has to be HDFC AMC. Very stable business, but a move that has brought some about reaction on the stock. 2.5% lower, 1886. Let's see what happens here. We've taken the fundamental view out there from Mayuresh twice already. Amit Harchekar, very quick 30 seconds. HDFC AMC, with the limited charts that you have, do they suggest anything?
Well, I would say I would be only turning negative on this counter once it closes below 1850. Till the time, I think it still remains into a buy on dip zone. If it closes below 1850, then we can expect a levels of around 1740 to 1730.
Okay. Mayuresh, one last question really. Would you be a buyer in Indiabulls Housing Finance? Quick answer.
No, I'll wait it out, Neeraj. Not hurrying into the stock at this point.
Okay, well, that's Mayuresh being crystal clear about that, not hurrying into that stock. Mayuresh, appreciate you taking the time out, and thanks so much for being with us on Bloomberg Quint today. Well, that's Indiabulls Housing Finance looking like starting off as the top loser. Just that, the top loser doesn't have too many gashes, just about 0.75%. However, that's the case with the top gainer IndianOpen Bank as well, just about 0.75%. So it's a flattish start seemingly. Let's wait and watch if there is more in store. Before we take in top call from our experts, Hadrien, Mendonca, a quick 30 seconds, the top banking stock to trade.
Sorry, which one?
The top banking stock, Hadrien, very quickly.
Banking stock, okay. So Axis Bank would be a stock that I'd really like. We've seen a good fall and it is finding support at its 50-day moving average. So I think Axis Bank could be a good bet, in the near term.
Okay, Hadrien, the top pick for the day then.
Yeah, I'd go with a sell, and that would be a sell on Bharti Airtel. Apart from what Yash actually you came up with, I think we have also observed on the weekly charts, a double top kind of a formation. The September 2018 top with exactly at 366, the top which we saw 2 days back. So I think that merits a sell around these levels. We're expecting a short-term target of 336, keeping a stop loss at 349.
Amit, well, just 10 seconds left. Your top pick for the day?
Well, I would short Kotak Bank. There is a rounding top on the short-term basis, and we're expecting a target of 1350 to 1360. Stop loss for the short trade would be 1500 on closing basis.
Okay, short Kotak Bank, short Bharti Airtel. Well, it's all index calls, and this is how the indices are starting off, very, very flat. Hardly any moves there. Not surprising, really. Let's see if during the course of the day, the pain gets aggravated. If not on the index, then on specific broader end of the spectrum stocks. The mid caps and the small caps should come up on your screen. Let's see what they are doing in the session today. About flat, so 17,353, 6 points lower for the mid cap space, 6 points higher for the small cap space. Hardly any movements there. So the indices have started off flat, no movement whatsoever. Let's get the heat map up on the screen. Lot of green, very little red, but not too many stocks moving. So let me start with the gainers first. IndianOpen Bank 1% higher, Maruti about 0.5% higher, Vedanta about 0.5% higher, Eicher Motors about 0.5% higher. So autos seem to be starting off on a half decent note with Maruti and Eicher Motors and Tata Motors in the top 10 gainers list. Information technology marginally higher, but that's about it. What's losing out? Grasim about 1% lower, but aside of that, not too much. Yes Bank is not seeing deep gashes as yet. HDFC Bank just about contributing, but yeah, no big losers in the session today. Well, maybe that's a bit of a respite. The indices now up 0.25%, so maybe it's not a bad start. Let's wait and watch how it shapes up. IndianOpen Bank, watch out for that one, the principal gainer. The UBS target was 1400. They've pre-provisioned a lot of things. Is this now at valuations where long-term investors might find it attractive? Well, maybe, but the stock is showing some strength today. We'll talk about that with a special guest coming up in just moments from now. But let's talk about some other trends as well. Stocks which should be in focus today. Jet Airways, without doubt, has to be that one stock that you need to monitor. 10% lower for now. Let's wait and watch what happens. It's en route to NCLT, yes indeed. And what about some of the other NBFCs in focus? Yesterday, all of these were the talk of town. Pinamal, marginally higher. Let's wait and watch if people sell into this any kind of an up move that is coming in. Shriram Transport, 1034, not doing too badly. And Diwan Housing, though, continues to grind lower, 3% lower. I say watch out for Shriram Transport. It got hit because of a deal yesterday. Valuations not too distressing, but maybe the trends are slightly weak. Agam, what are you spotting?
It may be a bout of short covering for Shriram Transport, but there are a lot of other losers yesterday which are advancing today. So Varun Beverages is one of them. It's up 4%. We have Max India, which is making a little bit of a recovery. That's up 3%. Bajaj Holdings is doing well in today's day of trade, up 2.8%. We have Suzlon Energy and Galaxy Surfactants, along with Vakrangi, surprisingly making a little bit of a recovery too. And of course, we spoke about this, Vinati Organics moving and heading back to the mark of 2100 rupees per share. But also to talk about some of those losers, besides Jet Airways, PC Jeweler continues to lose out, and that's down 7.5%. We have HDFC Asset Management Company, well, down 4%. And besides that, we are also keeping an eye on KPR Mills. And we've spoken about a whole host of ADA companies, and they're all under pressure. Once again, no surprises here, which will include Reliance Communication, Reliance Infra, as well as Reliance Capital. And well, though the losses in today's day of trade are not as profound as what we've been used to over the previous few days, well, losses all the same. So we'll keep an eye on these ones as well as we move into trade today. But for now, well, things are looking just slightly more stable as compared to what we saw yesterday, Neeraj.
Yeah, well, let's wait and watch if this indeed gets better or does it get worse. Very quickly, Amit Harchekar, would you use this bounce to create a fresh shot at these levels?
Absolutely. As I said, I would create short positions and keep a stop of 860 on the futures. We are expecting the breakdown what has happened on a weekly basis to take Nifty towards 11,400, 450 zone.
Okay, and Hadrien, the same to you. Do you think you'd take this as a short?
Yeah, absolutely. The bounce that we've seen in the early trades would be a good opportunity to go ahead and short. The only caveat here is, the 50-day moving average that I spoke about earlier. If we are seeing Nifty holding above it, then, we could see a slight bit of consolidation. But the overall trend currently still continues to remain slightly on a weaker side. So, keeping, changing my stop loss from 11,745 to 11,755. We are expecting a target of 11,600 in the near term.
Okay, well, on that note, I'm going to thank both our technical experts, Hadrien and Amit, for joining us and taking us through their views on the markets. Of course, a lot of ideas being discussed, but on that note, let me bring in our special guest for the day. We have Pankaj Murarka, the Chief Investment Officer at Renaissance Investment World, joining us. Pankaj, thanks so much for joining us, and good morning to you.
Good morning.
What are you doing in these markets? How are you placed when it comes to your cash allocation as compared to allocations in equities?
We don't own much cash in our portfolios, and that's not about this time. Generally, we as investors, we tend to stay fully invested.
Yeah.
Our core philosophy is India is a high growth economy, and within that there are enough number of high growth companies, and as long as those companies can compound earnings at high teens or probably a rate higher than that, short-term market fluctuations and stock price movements will take care of themselves as long as our companies keep doing well. And I think there are enough number of those opportunities out there. While there's some, I agree what you're saying, there's some degree of turbulence that's playing out in the marketplace.
Right.
But I think you leave that aside and there are enough number of companies out there.
Okay, Pankaj, good morning, of course, and thanks for joining in. The question is, do you reckon that the near-term gyrations in select stocks, not necessarily all, but select stocks, dampen sentiment enough for the good ones to fall as well and the markets to drift lower from where they are right now?
Yeah, I think that's actually playing out. There are enough headwinds that the economy is facing at this point of time. One, clearly growth has been hit and we are going through a low patch of growth from a broader economic perspective, and on top of that, this whole issues surrounding the NBFCs and all of that has created, it's been a perfect storm. So I think growth has been a casualty, and I think clearly, if you really ask me, economy faces significant challenges as we move ahead. So clearly, now that the elections are out and we've got a government with a pretty decisive mandate, it's up to the government to take decisive steps to revive growth. Otherwise, we as an economy, we have significant challenges.
Yeah, so if it doesn't come out in the budget, Pankaj, that's my moot question. Everybody's focused so much on the budget that the budget will dole out stuff which Dalal Street will like. What if the budget doesn't do that? And therefore, my question is, does the market, is the market levels right now hinging on some deliverables from the budget, failing which the market should technically be lower than where it is right now?
Markets can correct by 5-10%, meaning that can't be ruled out because there are a lot of things that are playing out. There's a turbulence, as I said, in the whole NBFC sector that's playing out, and that's having a rub-off effect across the financial sector in terms of having its impact on banks which have exposure to those NBFCs and so on and so forth. And markets concerned about that. Growth is slow, and on top of that, we have global headwinds. Yeah, we have a lot of global central banks meeting during the course of this week, and how the whole trade issue between US and China plays out. So all I'm saying is there are enough number of challenges, and some of these things in the short term can lead to a correction of 5-10% in the market. One should not be surprised if that were to play out. I think from our point of view, because we tend to be slightly more medium-term focused, and we take a 3-year to 5-year view on businesses, these kind of corrections or volatility in the market at times are opportunities for us to buy into some of those good businesses where stock price can correct significantly during the course of this kind of turbulence, and probably then hold them for a period of 3 to 5 years.
Okay, just before we move further, just want to mark the first 7 or 8 minutes. The markets are now up about 1/3%, so 11,712 for the Nifty. And Agam, some of the stocks that corrected viciously yesterday, maybe that bout of short covering happening, so Vedanta, JSW, Tata Motors, etc. This could be very near term, by the way, don't really take this at face value. These small upticks could very well get sold into. But that's what's happening. Maruti is up about 1% as well. What is not doing well is Indiabulls Housing Finance, down about 1.8%, and Hindustan Unilever, Agam, is at 1800, down about 1%.
Yeah, two other stocks which were doing very badly yesterday are looking at recovery. So Varun Beverages and Vakrangi, of course, they both have their own reasons for being under pressure. But Pankaj, coming back to the question about the fact that you're still invested in the markets, we speak to a lot of other money managers, and anecdotally they give us maybe 3 or 4 stocks offline where they suggest that these stocks really haven't come off, despite the fact that we've seen volatility in benchmarks. In fact, the benchmarks really haven't come off either. Where is the opportunity to allocate new money then, right now?
Well, opportunities are there across various sectors. So, for example, we still like private sector banks because we think while meaning there's this whole issue about NBFCs, probably it could lead to probably higher growth or higher opportunities for some of the other private sector banks, because some of these NBFCs might vacate space or they might lose market share. We like what I've been seeing. One of the so India is a large economy, and while from a big picture perspective the macro looks a bit challenged at this point of time, or the economy looks challenged, there are enough underlying sectors or segments which are delivering growth or growing phenomenally well. One of the most exciting growth story in India, which has actually played out over the last 2 years, which has not been talked about much, is all about data consumption.
Right.
The average data consumption of a user in India 2 years back was something like 2 GB. Today that's gone to 10 GB because of the proliferation of smartphones. So we like a lot of business in and around internet, the internet economy of India. I think the internet economy of India is now really taking shape. We have a handful of companies which are there in the listed space, and they've been doing pretty healthy growth. So we like the whole internet ecosystem and businesses around that.
Okay.
So all I'm trying to say is India is a very wide and a very diversified economy. There are enough number of growth opportunities that exist in the economy despite some challenges in few sectors.
Okay, that's true. And so would you therefore play it via the connectivity providers? Would you play it via ancillaries that help reach the connectivity, or do you make use of companies which directly benefit out of the provision of internet being there and sales or actions happening and they being the touch points?
So we like the internet businesses, companies which run their businesses primarily on the internet. The service provider, as you call, or you're referring to the telcos, probably there could be an opportunity there as well at some point of time, because that sector itself has gone massive consolidation. But at this point of time, we see massive opportunity in the whole, internet businesses, or businesses which run primarily on internet, because their potential customer base actually has grown multi-fold. India's smartphone penetration has gone 4x in the last 2 years. So which effectively means their potential customer base has gone 4x. Yeah, and when that customer base starts using their services, the kind of growth that can translate over the next 5 or 10 years, that can be phenomenal.
Okay, Pankaj, I mean, without taking names here, of course, I may refer to a few. I want to talk about consumption. Of course, economic factors are not indicating the best of trends when it comes to consumption in India. You can get guys like HUL and ITC are holding up in terms of the volumes, and not just them, several of their peers too. But then there is this question of valuations, and they will always be trading at premium valuations. That said, how would you be placed when it comes to staples now as a sector?
So I think staples is one of the safest bets in the whole consumer basket because the kind of consumer slowdown that we've seen, and I think it might continue for some more time because if NBFCs are one of the biggest lenders to a lot of this discretionary consumption, and if they are slowing down their growth, it's going to have some impact on the consumption growth as well. So probably staples looks one of the safer havens for the time being in the whole consumption pack because they probably will be the least impacted because of the slowdown by some of these lenders.
Okay. Pankaj, we have a discussion coming up with two of the top second-hand car dealers, Mahindra First Choice and Maruti. And we thought it was prudent to probably do that because while the first-hand car sales are doing what they're doing, maybe the second-hand market is showing slightly different trends and will give a sense of what the economy is happening as well. What would you want to know from that side of the market, which will maybe help you come at a decision on how do you play autos?
So my understanding is the aggregate, if you look at second-hand car volumes or the trade, is something like 4x of what the OEM sales in India are. Yeah, that market is 4 times bigger than the new car sales market. So it's a pretty large ecosystem. I think one of the most important trend for me to decipher there would be how many of their customers are the first-time buyers. So are the first-time buyers buying a second-hand car as before buying a new, before migrating themselves to a new car because these are available at a much cheaper price points? And if that be the case, then I think that will be a pretty encouraging trend, which means we have a lot of latent demand or customers we are willing to or waiting to upgrade to a new car at some point of time in the future.
Interesting. The other thing is we did a discussion with the electric vehicle manufacturers and particularly the two-wheeler and three-wheeler manufacturers on Friday. And their experience is that on a very low base albeit, but the sales volumes are growing. Do you reckon in 3-4 years it will eat into the market share of some of the current OEMs, or do you think the OEM companies will set up capacities and technology in order to meet the rising electric scooter, electric three-wheeler market?
So I think the OEMs will do that because they are not going to sit back and let someone else come and make all the investments and take the market share away. But I still think while there is a lot of noise around EVs, it's we are still too early in the whole evolution of EVs. If you look at globally, EVs are less than 2% of global car sales.
No, but these are the two-wheeler and the three-wheeler companies, which people say are a lot more practical because charging infrastructure is not that massive, etc.
Even in case of two-wheelers, the moment you migrate from a IC engine or a diesel to a EV, the cost goes up by something like 50%. A two-wheeler, be it a motorcycle or something or a scooter which is electrically powered, will cost you something like 100,000 rupees. So I think the price points are significantly higher. We need much larger base to bring that price points lower, and I don't think so anything meaningful happening over the next 5 years. If we get to a 10% penetration on EVs, I think that would have been a good job.
All right. So Pankaj, for a lot of those investors who will have perhaps find it challenging to choose between NBFCs, especially given the problems and the challenges right now, how would you help them sort out their allocations towards the sector?
I think obviously there is a perfect storm in the sector, and one cannot rule out the risk of a collateral damage or a tail risk actually playing out because things have been into a limbo for now almost 7 or 8 months, and now we've got to a stage where markets are not willing to wait anymore, and markets have got far more aggressive in terms of pricing these companies, both either on the fixed income or on the equity side, pricing the risk that might emerge out of it. I think for investors, they should wait on the sidelines. There's no hurry to jump in to buy some of these companies, but I think somewhere let things settle down and let's see how it plays out. And probably I think, but over the next 3 to 6 months, there'll be interesting opportunities in the space, because I firmly believe that as a sector, the sector still has huge growth potential when you look at from the next 5 or 10 years perspective.
Right.
It's all about investing into right business models which are slightly more conservative and who think through their businesses across cycles and probably can navigate some of these challenging times. Because all I'm saying is the NBFC sector, if you go back and look at the history, it went through something similar sort of a crisis even in 2008, 2009 financial crisis. So this is not the first crisis the sector is facing, and I'm sure this is not the last one.
So when the dust settles, say 6 months down the line, 8 months down the line, 1 year down the line even, What are those factors that you're watching out for at the back of your mind that this is what I'll be watching out for before I move into some
We want businesses who are running pretty granular asset side of the book. So they're pretty retail, pretty granular, and who are very good at managing the risk on the asset side of the book. If any business can demonstrate that, then the lenders, the ability to borrow will be far higher because the lenders will have comfort in their book,
right,
and in their credit underwriting skills. So what I think we need from our point of view, we are looking at businesses which have very deep distribution expertise, who have great underwriting skills, and who run books which are very granular.
Right.
I have a follow-up to that then. The common refrain that everybody hears, by the way, Shriram Transport, etc. are all up in the session today. Keep that at the back of your mind. Shriram Transport is at 1040. But the common refrain that everybody hears, Pankaj, is that the space that is vacated by the weaker NBFCs, housing finance or otherwise, will now be taken up by the stronger NBFCs and some of the private sector banks. All of those stocks are very expensive. Would you buy them because the growth might be higher than normal because of the space vacated? Or would you look at the valuations and say that, let me take a step back?
So we do own private sector banks, though we've stayed away from some of those NBFCs for a while because we've been concerned on the sector. And I think some of this growth will get translated into opportunities for these larger players because they will take a much higher market share. Having said that, I don't think so this is the end of the road for even smaller NBFCs.
Okay.
They might be in rough feathers today because there is a fair degree of distrust amongst lenders and to whom to lend and whom not to, and they're distrusting or they're trying to paint every borrower with the same brush. But I think probably in 3 months' time things will settle down. And even if you're all I'm trying to say is even if you're an NBFC and if you're a smaller in size, if you're running your business well, you'll still do well. And we are open to looking at them.
Okay, so let's assume if you don't have any in your portfolio, would you go out and buy the good banks and good NBFCs, or would you buy the distressed NBFCs right now?
No, we are not a distressed players. We essentially, our whole framework, our philosophy revolves around buying good quality businesses, and we're always looking for superior growth. So we are not here trying to buy a dollar for 20 cents or something like that. I mean, that usually doesn't work for us. All we always look for is good businesses, well-run businesses, and we are happy at times to even pay a premium to the evaluation, because we believe good businesses eventually do well over a period of time, rather than trying to, get into bad businesses and take over a lot of their problems.
Right.
By the way, the market is completely flattened out, Agam. As we speak, it's hardly in the green, so it went up about 0.75%. And it's completely come off. I think that's the template that we've seen the last few days. I was not here yesterday, but I was just looking at IndianOpen when we did it yesterday too. It started off marginally higher and then just came off, and that's exactly what's happening today. We're talking about in the morning. I mean, you can call it a sell-on rally template. Right. It's virtually a sell-on all opportunities template right now. Any given opportunity, any whiff of opportunity into weaker hands on the markets is getting sold into, and that is not a very pretty sign.
Well, and Neeraj, among the technical analysts we spoke to yesterday in Countdown and the technical analysts we spoke to this morning, all of them are unanimously suggesting more weakness which is in store for the benchmark indices, and I reckon that is something that's playing out at least in the near term.
Well, let's wait and watch. Pankaj, Murarka, take a moment to thank you for joining in today and giving us your perspectives. Really appreciate your time.
Thank you.
And that's the wrap on the market discussion. But stay tuned because there's a story with new vehicles registration in May. But what's happening in the second-hand auto market? We discussed that with Shashank Srivastava of Maruti Suzuki and M. Sathiyanarayan of Mahindra First Choice Vehicles.